FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. As you guys know, we're going through our 4 pairs that we're going to be following for the entire year. Last week, we took a look at pound JPY. This week, let's take a look at NAS100 and let's break down the entire previous week to see what we can learn about this particular pair and how it behaved, and most importantly, what were the possible setups that were available on this pair. What were they? Were they wins? Were they losses? What was the entry? What would have been the exit? Everything that you possibly could know about the previous week, so that way you could hopefully become a better trader for the next. So if you're new to the channel, welcome and join us along this journey for the next year that we're going to be following NAS100, gold, pound USD, and pound JPY. If you want to join our community, the link is in the description for our Discord group. Go ahead and join us there so we can discuss all this here for you. All right guys, so without further ado, let's get this started with NAS100. All right guys, so you can see here that we're basically coming off a peak formation low on NAS100. So what does that mean to us? The way that we trade is we're basically looking for a directional bias. Now, being that we're coming off a peak formation low, to us that just means that we're looking for buy setups only. We're not interested in looking for sell setups. All right, so with that being said, here is Monday at the beginning of the week last week. Now you can see here Monday opened up with filling the gap that closed from the previous week. On the 150 minute chart, the start of the week is right in this area here. So what we're looking at here is Monday consolidation, accumulation here, and we started to really accumulate into London on this particular pair. Now, is there a possible setup here on NAS100 during the London session? Well, that kind of depends on you as a trader. So if you're a aggressive trader that's looking for every possible setup, then yes, there would have been an opportunity here during London session for a type 3. If you're a more conservative trader and you're looking for specific behavior before you take a trade, then no, there would not have been a trade set up for you in London or either in the US as well. Let's go ahead and talk about Monday here. We started to accumulate during the Asian session and then also accumulated coming out of the Asian session into London. Now, very important factors to note on Monday's London session is the fact that we exited the Asian session from the very top. So immediately, if we're looking for buy setups, okay, if we're only looking for buy setups, that kind of only leaves us a couple of different options. Okay, either we're going to go ahead and have an aggressive move coming out of Asian session that goes down to retest the Asian low, or even further. That would be like, if we go further than the Asian low, that would be basically a type 1. If we don't and we stop here at the Asian low, that would be a type 2, but we didn't. We ended up just going to the middle of the range. That's what we're looking for if we're looking for a type 3 setup. All right, so the trade itself during London session on Monday was a type 3 setup. Now, we did have a lot of consolidation happening here at the beginning of London session. A couple things that stand out to me is once we zoom in to this price action, you can see this right here. We start to consolidate and then we immediately have a big candle, okay, a big bullish engulfing candle. Now, to me, this candle is important because if you take a look at what it does, is it basically takes out all of the previous highs going back to about 130. Okay, so at 130 we started to consolidate coming out of the Asian session, and we started to create a low and a local high. Okay, so if we're going to take any kind of a trade setup like a type 3, we need something to tell us, hey, we're pretty much done fishing for orders here and we're actually moving higher. All right, so for me, that would have been this engulfing candle here. Now, the important factors of this particular type 3 is the fact that we created this engulfing candle and we basically broke all of the previous highs going back to the start of the ranging that started at 130. That's one thing. A second thing is that we closed above the 13 EMA. That's two. And number three is that we were still tagging the 50 EMA. This is very important because this is one of the core principles for type 3 setups, is pinning to a 50 EMA. Not only pinning, but you can see here from that 130 candle, we continue to pin all the way through over and over and over again, even on the engulfing candle. Once we had enough orders collected in this area, we moved away from it extremely fast. Now, for the entry of the setup itself would have been on this next candle. The next candle itself would have been the pullback. So the entry is anywhere on this pullback candle. It could have been here, it could have been here. It just depends on you yourself. If you're paying attention to this, okay, what kind of a setup do you want? Are you going to do a market order, or are you possibly going to do a limit order? Well, if you're doing a limit order, okay, because you want the best possible setup, which is fine, what you're going to want to do is, if you're going to use a limit order, I would at least put it at 50% retracement of the actual big engulfing candle. So 50% retracement would have been somewhere here, and then obviously your stop just goes below the local lows. Why do the stops go there? Because if I'm wrong about the setup, I just want to be wrong right away and not drag it out for an extended period of time. Okay, and then from there, where is our target? Well, the first target is basically just a simple 2 to 1. All right, a 2 to 1 is just essentially going back to the highs that we've already been to. Okay, now can we go further than that? Yes, you can go way further than that. You can basically use previous days structure, or essentially Friday's structure, to get some next targets. Now, for me, looking at the previous day here, which is this day here, some targets that stand out for me would be these wicks up here. That could be one target. A second target would be on top of this news candle. Okay, so those would be my other 2 points for take profit. So if I'm able to get a 2 to 1 and then from there go longer, okay, those would be my 2 next take profits. So in this case, you're looking at, that would have been almost a 6.5 to 1, and then to the very top, if you were aiming towards that, that would have been almost a 12.5 to 1 on this particular setup. Now, obviously, we didn't go all that high. We almost did. I want to say about 11 to 1. Yeah, about 11.5 to 1 risk reward on this trade, fully out. Anything after 2 to 1 risk reward ratio on this is a free gift that you're getting out of this. Okay, so that would have been our trade setup for Monday. During the New York session, there was no trade setup at all. The only possibility that we could have had was if we had a pullback back to the 50. That could have been like a continuation trade. Now, going over to Tuesday. Okay, what do we have for Tuesday? So again, we start the same way we always start, with accumulation or consolidation during the Asian range. And then, since we're still looking for buys, okay, we get this aggressive move down at the very beginning of the London session. Now, depending on what type of trader you are, okay, if you're an aggressive trader, you might have seen this here as a setup for a type 2 trade out of the edge. Okay, and so what does that look like? Essentially is you're looking for a first leg in Asia, and then second leg at the very beginning of the London session. All right, and then obviously you're looking for something like this is what you're looking for. All right, so depending on if you're an aggressive trader, this is very likely what you would have seen. Now, if we go back to that particular point in time and we're looking for a trade out of the edge, essentially, what are we looking for a second leg? We're looking for either a pattern, or if we don't get a pattern, then we're looking for essentially a close above the 13 EMA, right? And essentially, we don't have a railroad track. This is not a second leg railroad track here, because this blue candle does not cover at least 75% of the previous candle. So that wouldn't work for an entry for us. What would work for an entry is obviously closing above the 13 EMA, and then the next candle is your pullback. So if you're an aggressive trader, that could have been a trade set up for you. You're basically aiming for something like this. There's essentially your trade setup. Now, the one thing that immediately stands out to me is what? Well, if I look, I'm seeing a rejection from the middle of the range and a rejection by the 50 EMA. So when I see that, those two things, and then on top of that, this gives us a railroad track actually pointing down. To me, this is a very good indication that we're not done yet. Okay? That we are not done yet hunting for orders. All right? So if you don't know that, then obviously you would take the trade, and then this would have ended up being a loss. Okay? That would have ended up being a loss. And that's fine. If you don't know what you're looking for, if you're new or whatnot, that's perfectly fine. But some clues that even if you take the trade, even if you take this trade as a type 2 trade out of the edge, here are some immediate clues after you get into the trade. The very first clue is on the very next candle. The very next candle fails to break and close above the 50 EMA. It even wicks. And then if that's not enough, this next candle gives you another railroad track. Okay, now 2 railroad tracks stacked together like this gives you what we like to call a quarter wood. This right here is the last clue that should tell you, hey, there's something wrong here and I should not be in this trade. You should exit out of this trade at the end of this railroad track if you're still in, if you took this trade as a trade, as a type 2 trade out of the edge. Okay, because you have so many things essentially going against you. All right, those should be red flags to you. Okay, so red flag number 1 is the fact that we rejected the 50, we rejected the middle of the range, and we also wicked above it. Okay, red flag number 2, a really big one, is the fact that we have double railroad tracks, and the second railroad track here closed below the very first one to begin with. This right here, and again, rejected the 50, and it wicks. Rejects the 50, wicks. So all of these things are major clues for you to pay attention to and to say, you know what, this is not right, I should get out of the trade. Now granted, it's going to be a loss, but that's okay, because now you're saving yourself. Instead of taking to be below the low, now you're just taking it here. And how much better of a loss is that going to be when you're taking a 95 tick loss instead of taking a 493 tick loss? Okay, so everything, once you take a trade, everything is in the details, that you understand how price action is moving and how it's reacting to certain behaviors. As we play this on here, some traders we're still looking for buys, of course. Another set of traders, that the more conservative traders would have seen this as just a regular type 1, type 2 hybrid, because it's really hovering at the low of Asia, right? All it's doing here, all price action is doing, is just continuing to grab orders that are sitting here. Okay, that's all it's doing. Now, some of you traders that are conservative might have seen this as a possible second leg, right? First leg here, second leg here. Hey, this looks like a way better setup, right? Now you still have the factors from the previous one though, where the second leg here doesn't give you a railroad track, so it's not giving you a second leg pattern to be traded. So you have to wait again for the close of the 13 EMA, which doesn't happen until this candle. Okay, now if you take it, you're basically saying to yourself the same concept here. The low is going to go right below this previous low, because again, if we're wrong, we just want to be wrong right away. Okay, now this is still quite a bit of risk, as 379 points, but your 2 to 1 here that you're going for is essentially right here. Okay, your 2 to 1 is basically going to cover the previous day's gap that was left open. All right, so that would have been your trade setup. Now, where is the entry? Well, if you waited for the next candle, right, which I always tell everyone to do, is wait for the next candle so you can get a better entry, okay, you would have gotten this massive red candle. Now, if you get into the trade here on this massive red candle, you should be taken out almost immediately after this red candle. You would have been taken out there at the very beginning of the US session. So either way, if you take a type 2 trade out of the edge or a regular type 1 type 2 hybrid here, okay, this, based on how we trade, would have been losses. Now, is there a way that you could have avoided the second loss? I think there's clearly ways that you could have avoided this, right? The huge loss here. This would have been a smaller loss, but it's all in the clues of these candles, right? Now, this second one here, all right, could you have avoided it? I don't think you could have avoided it, besides the fact that it's just very late into the session of the box. So you're taking it, you know, kind of in the way, and then you still haven't broken above the 50 EMA. So these are all still clues that you can look for in price action. But even if you took this trade, no big deal, you lost, and that's just it. You move on from it. Okay, you're gonna have losing days, and that's completely normal. All right. Now, for me, if I would have taken this trade here and I would have gotten in, and I see this immediate red candle, again, major red flags, because again, we're rejecting the 50 EMA, and we're now moving, starting to want the 50 EMA is acting as a form of resistance, and it's helping push price down. So after this candle here, after this big red candle, if I took this trade and I'm still in this trade after the red candle, I would have taken myself out of the trade. Okay, just take yourself out of the trade and just reset. It's not a big deal. Now we go into the US session, and we end up getting, what do we get in the US session here? All we did is basically come down and grab all of the orders that were sitting below these two lows from the London session. That's all we did, okay? And if we go even further, we're basically going towards this right here, these London session lows from Monday, okay? Now, the thing about this particular type of trade here on the US session is this is not a railroad track to me, because again, it did not cover 75% of the candle. This would not have counted for me as a railroad track. So for me, this would not have been a trade. And yes, it moved nicely and all that good stuff. But to me, I'd rather miss a trade and it go up 150 pips. I'd rather miss that trade if it did not meet my rules of entry that I have in my trading plan. Some of you would look at this and be like, oh man, I missed out. And so my question to you is, what exactly did you miss out on? Because what plan here would you have had to get into this trade based on, you know, the rules that we have for trading London or the US session? Okay, this would not have been a trade set up here during the US session. Yeah, so it had a great run, but at the end of the day, if the trade setup doesn't meet the requirements for the strategy, then it's just not a trade, and that's okay. That's why you have other pairs that you follow. So when you don't get opportunities on one pair, you can go to another pair and see if there's opportunities there. Now on this day, depending on if you're a conservative or aggressive trader, you would have had a losing day. And that, again, that's okay. That's just part of trading. Now here we go on to Wednesday, and again, you could see the setup here that would have had, the setup here that we would have had on NAS100 for the London session. So we're looking really at this being another type 2 trade out of the edge right here. That would have been a setup for you. Now, how does this work in the sense of looking for the setup and the entry and all that stuff? So when we take a look at this particular trade setup. Obviously the first leg is here, second leg comes down. Again, we're accumulating during the Asian session. We make the manipulation move first during London, and then we distribute out throughout the late London session into the US session. So what is the actual setup? Obviously the setup itself is the type 2 trade out of the edge. Where is the entry and all that stuff? So the entry, we don't get a second leg pattern. We don't get a row track, none of that stuff. So our entry is going to be after a close of the 13 EMA. And then the very next candle, we get a pullback. So there is your entry here. Now, where are you taking this as far as a 2-to-1 risk reward ratio, and where are you putting your stop loss? So for me, the biggest factor that I'm looking at where am I going to put my stop loss is here. Do you see this big wick? If this wick wasn't here and it was just a body of a candle, my stop loss would go here. But the fact that we got this big wick, I'm not putting my stop loss all the way down here. That doesn't make any sense. Okay, so for me, my stop loss is going to go below this blue candle here of where it closed above the 13 EMA. All right, again, if I'm wrong about it, I'd rather be wrong right away, get out of the trade and move on. Okay, so that's where my stop is going to go, and then from there we're just again going 2-to-1. I can get 2-to-1 just by going back up to these local highs here, and then even higher is going to be, this would be the next target after that. So anything after 2-to-1 is basically here, my next target. Basically makes it a 3-to-1 trade here. All right, so this right here would have been the trade setup. Now, if you're looking at this, a couple different factors from the previous day is that right away we actually close above the 50 EMA. So that's no longer acting as a barrier for us. So we should feel pretty good about this particular trade because now we no longer have the 50 acting as a form of resistance for us. So now we're just really looking for local highs to be taken out and then more highs up here where there's going to be liquidity or orders sitting up there. Orders are going to be sitting on top of here and on top of here. All right, so that's the trade setup for Wednesday during the London session. Now this during the New York session here is obviously news. I think this is CPI news if I'm not mistaken. So yeah, so this would not have been something obviously trading. Very important that if you're trading on a news day, like for example you have CPI on the New York session and you're trading London, it's increasingly important that you understand that you need to be out of that trade before news hits. Very important of that factor because you don't want to be stuck in this. You don't want to take a winning trade and turn it into a loser because you can't control your greed and just grab the 2 or 3-to-1 that just gave you during London. Get the money and get out and then wait for this thing to play out how it's going to play out. Don't worry about what news does, essentially. Okay, obviously the rest of the day is kind of wasted. I don't trade news anyway, so it doesn't matter to me. So the next day is my next day of trading. Now coming into Thursday, again, if you look, we're still in coming off peak formation low. So this whole time we've always just been looking for buy setups only. We don't care if sell setups appear. We're only interested in buy setups. That's the whole point of having a bias, so you can kind of avoid getting mixed up, or am I looking for sells, or what of this, what of that. Don't worry about it. As long as you have a bias, just keep with the bias until you get another peak formation. That's it. Okay, so here Thursday, again, accumulation during Asian session. The manipulation happens early into the London session. So what do we have here at the very end of this low here? All right, now if you look at it from a 15-minute chart, obviously it's just a one leg pattern, right? We do have a railroad track here as well, kind of going to be dependent on who you are as a trader. Are you more aggressive trader or are you more conservative trader? If you're more aggressive trader, you're very likely going to be trading not just on a 15-minute time frame, but 10 or even 5-minute time frame. So what does this look like on a 10-minute or a 5-minute time frame? Does it give you a better setup on the lower time frames that you can actually take compared to a 15-minute time frame? And the reason I ask this is because there's going to be times where price doesn't give you a second leg for it to become a W. Okay, sometimes you're going to get one-legged patterns. And so here, this is essentially a one-legged pattern. So what does this look like on a 10-minute time frame? Does this look any better that you could possibly, trade it? Here you go. Here's a 10-minute time frame. This to me here is basically a 4-star doji, where you basically have a big bearish candle, engulfing candle, and at the end you have a big bullish candle, engulfing candle, but you have the stars in the middle. The more stars in the middle, the better. This right here is not really something that's tradable on a 10-minute time frame. Well, what about the 5-minute time frame? What does that do? Well, if you look on the 5-minute time frame, now you kind of see a pattern there that's actually tradable. Well, if you go over to the line chart, you can clearly see that there's a pattern there that you can see on a 5-minute time frame. So if you're an aggressive trader, this might be something that you're going to be looking at. Okay, now is this tradable on a 5-minute time frame? Well, let's take a look. So the same rules essentially still apply. Okay, this is the first leg here, and then this right here obviously is the second leg. Now the second leg doesn't give us a railroad track, right? It doesn't give us any of those factors. So we're still aiming for the close of the 13 EMA. But obviously you could see the biggest problem right away is the fact that if you're doing this, where are you going to put your stop loss? Where are you going to put your stop loss? Are you going to put it all the way down here at the bottom? No, that doesn't make any sense, right? Why does that not make any sense? Well, I just talked about it in the previous day. This wick here, right? We're not going to put it below this wick because it just doesn't make any sense. The orders were already grabbed that were sitting here. So where are we going to put it at? Well, we can put it below the actual candle that closed below the 13 or the close above the 13. You'd be looking at something like this. Now, the next question you have to ask yourself is, okay, what am I going to do about this 50 EMA? Because in order to get 2 to 1, all right, it's going to look something like this. There's your 2 to 1 trade. Now, if we go back to a 15-minute time frame, what does this look like on a 15-minute time frame? On a 15-minute time frame, this trade is not even viable yet on a 15-minute time frame, right? So you could see the difference between a 5 and a 15-minute time frame, where you might be able to make something out of a trade and get in a lot earlier than you would on a 15-minute time frame. Now, choosing whether or not to go down to a 5-minute time frame or a 15-minute time frame is really going to be up to you as a trader. How comfortable do you feel? And most importantly, how confident are you about the 5-minute time frame? You have to ask yourself, just because I'm showing you this example doesn't mean that all the trades on a 5-minute time frame are going to work. Here's the dilemma that a lot of traders get into, is the fact that I'm showing you one example of possible trade setups, right, on a 5-minute time frame. How do you know as a trader that this will actually work over an extended period of time? Because this is just one example. I could show you 50 more that won't work on a 5-minute time frame, right? That may look exactly like this, but they don't produce a winning outcome. So this example would be very good to know what are the actual points of wins and losses over an extended period of time. Let's say over 1,000 trades. How many wins, how many losses do you get over 1,000 trades if you take this setup on a 5-minute time frame that looks like this, that has these factors in it? And if you don't have that data, then you're not making a very reasonable assumption that you have a good backing for this to actually work and play out in your favor. So any changes that you make within your trading style itself, this could be with any strategy, it doesn't matter. Any changes to the strategy that you make, you better be making that change because you have the data to back up that it's going to produce a better outcome for you, more positive than negative. So essentially you'll get more wins than losses if you take this over 1,000 trades. And if you don't have that, then you shouldn't be doing this. So very important to understand that. If you're taking this on a 5-minute time frame, all right, let's go back. You see what happens here. You get stuck sideways movement, and you get stuck below the 50 EMA. Now, of course, does this play out to go higher than the 50 EMA? Yes. Now, on a 15-minute time frame, though, you're waiting a lot more on a 15-minute time frame than you were on a 5-minute time frame. But you can see what happens here is just consolidation, consolidation, consolidation. Even if you get into this trade, there's a rule that we have, right, that if you're not in substantial profit after 6 candles, or about an hour and 45 minutes to 2 hours, okay, then there's something wrong. You should probably get out of the trade or move the break even, right, so you don't turn the trade into a loss. So is this setup the best possible setup? No, it's not. Does it have all of the things that we're looking for? No, it doesn't. Okay, it does not have all of the things that we're looking for. If you took it on a 5-minute time frame, would it have worked? Sure. If you would have held it, for a 2-to-1 or whatnot, yeah, absolutely. But based on what we know, based on the data, okay, that we have on these, this is not a good trade setup. So not knowing for sure if this is going to work out in your favor or not would not be a good idea to take this as a trade setup. Even in New York session, there's nothing here for me that I would take in the New York session. Okay, so for me, it's not worth the risk. And you could see very beautiful move that went up quite a ways, even after, which is fine. But for me, for the type of trades that I'm looking for, it's just not in my trading plan. And so here's the key difference between me and everyone else is I'm not looking to chase a trade. I'm not looking to chase a market. I'm just looking to see if the market gives me something that I'm looking for. Something that I know gives me more wins than losses over 1,000, 2,000 trades. I know specifically what I'm looking for in either a type 3, type 1, type 2, whatever the setup that I'm looking at. And if it's not there, I just simply don't take the trade. I skip the trade. Not every day is a trading day for me. I would rather go 2 weeks without taking one single trade than break my trading plan and take a trade that was not aligned with my plan that I've back tested for so many years. Because what's the point of back testing something, grabbing the data and seeing the data that you have, but then you actually end up breaking your own rules just because you feel like you have to get into a trade because you haven't taken a trade in 2 or 3 days? How many of you feel that way? Whenever you haven't taken a trade, you feel like you're forcing a trade setup. And at the end of the day, those trade setups most of the time aren't following your trading plan. So it just doesn't make sense for you to take something that just is not going to work out for you, or that you don't know the results based on the data and you're just not following your trading plan. So now we get into Friday. Again, same thing, still looking for buys, right? And what do we end up getting on Friday? Well, Friday, you actually had a decent setup on Friday during London. Kind of meets all the rules that we're looking for, right? You end up getting, it's essentially a type 3 with a star pattern here and a pullback, okay? There's your trade setup, essentially, a 2-to-1, something like that. Now, what happens? Well, it ends up being a loss. It's pretty simple, right? It ends up being a loss. It has everything that you're looking for, okay? Has everything that you're looking for. Has all the confirmations that you want, right? Coming to the 50 EMA, you're getting a stop in the middle of the range. You're getting a star pattern here with a pullback. So everything is there that you're looking for. You're in the correct, directional bias, and you still lose. So this right here, I would have taken this trade 100 out of 100 times. This trade right here has everything that I'm looking for in a trade setup. I would have taken that 100 out of 100 times, okay? This one just happened to be a loss. But I know if I take this exact same setup over 1,000 trades, I'm gonna have more wins than losses. This one just happened to be one of the losses. There's nothing in New York to trade at all. Nothing at all for me. So this would have been the only thing that I would have looked at. Okay. Now we have broken down the entire week, right? What kind, if we take a look at just the week in general, if we take a look at the week in general, we go back to the very beginning, what kind of a week did we have here? When we just look at it, we essentially had a trending week, right? We still trended higher. Right? You could see that from still coming from the peak formation low. You could see we started the week here and we still went higher, but we just didn't have a lot of trades that would have went in our favor. We would have had this one would have been a loss, right? This one would have been a win. This one would have been the best trade of the week at the very beginning of the week, right? This one would have been another win here on Wednesday. And so there's going to be wins, there's going to be losses throughout the week, and that's perfectly fine. So that is your weekly review on NAS100, guys. As you see, there's going to be wins, there's going to be losses, there's going to be good trades, there's going to be bad trades. There's going to be awful trade setups, there are going to be really good ones. And some of the really good trade setups may end up being the losses anyways. But that's okay, because as long as you have the data to show that over 1,000, 2,000 trades, you'll have more wins than losses, those are just part of the losses anyways. So don't worry about the losses. The losses are going to happen regardless. You're not always going to win, okay? So understand that the losses are going to be part of trading no matter what. All right, guys, so I hope you got a lot out of this video. I hope you enjoyed watching this video, guys. And of course, like I said before, if you want to join us in our Discord community, Trading with a Purpose, the link is down in the description. If you guys need help with finding directional bias or mapping out peak formation highs and lows and things like that, consider joining us on FXM Plus. Links for that is also going to be in the description. That way, if you don't know how to do this, I'll do this. I literally do this for you on FXM Plus every day. So until the next video, guys, we will see you in the next one.